Hey guys, Jason here for TheChartGuys, taking a look at our 5G sector today. We'll be covering 5 tickers. I'm going to start with AVGO. AVGO was a wild ride today. In yesterday's video, we talked about how we were overextended. We are still overextended, but for the vast majority of the day, bulls did not give up any of the time frames. They kept setting higher highs, higher lows. Tried to top fish an entry for a short position, got stopped out, minor loss. And then I tried to do it again, stopped out for break even. And then I said, you know what? Why fight this? Let's just start trading these higher lows. So I got in on a 2-minute higher low, rode that for a good part of the day, and more than made up for my losses on those short positions. And that is the beauty of technical analysis. You cut your losses early, you take as minimal loss as possible, protect your capital, and it allows you to do basically what I did on AVGO today, have 3 trades, 2 of them bad, 1 of them good, and it was more than enough to make up for those losses that I suffered on those failed short entries. So that's what TA is all about. So let's take a look at AVGO. First thing I want to do is talk about the weekly time frame, because I made a mistake in yesterday's video by not addressing the weekly time frame on a lot of these guys. Someone pointed this out to me. A weekly equilibrium, absolutely beautiful. Look at this tightening range. Today we see a big breakout over 302.33. That is a signal that your weekly EQ has broken, and we are seeing massive moves to the upside. So when did we break this? Today's action or yesterday's action? Likely yesterday. 302.33 is the level to break. We are now bull breaking out of this weekly equilibrium. Let's check out the daily time frame. That should have been our signal. I should have been paying attention more critically to what was happening on the weekly time frame and recognize that we had a weekly bull break over 302.33. That would have had me a lot more interested in a long position and would have me much more open to the idea of just rampaging bull power instead of looking for that daily higher low that I still want and expected yesterday. But it's hard to stop the bulls who are eager to break out of a weekly trend. So where are we on the weekly time frame? We have resistance at 323.20. And if we had another day like that, like today, that is easily within reach for us. But I do believe that the bulls need to consolidate. And I am still going to be looking for that short entry. If we see something like today, where we had just almost non-stop 5-minute, 2-minute higher lows, just grinding this EMA for the better part of a day, you know, I'm going to take those entries. I'm going to watch for those higher lows. I'm going to get those entries and just keep riding up those stops. Only toward the end of the day did we see a little bit of weakness, a big run up to 316.78 and then a pullback. So what we're looking for is still going to be a daily higher low. The last one wasn't until 286.52, a massive range for us. So we need to be very, very careful about this. We went up fast, we can go down fast. So when we fall, and we should fall, we almost always do after a big run up like this, it's going to be based on RSI levels, not necessarily these resistances, because we haven't had a real opportunity to establish resistances and supports on the way up. So daily time frame, RSI 72.43. Next resistance is 323.20. Nothing really in the way until then. You may look at this resistance over here at the high of 316.65, but I believe we plowed right through that today and didn't really, well, no, look at that. We didn't plow through that. We had found a little bit of resistance right in that area. That's interesting. We'll check that out on the sub time frame. So 323.20, 316.65, but more critically, it's going to be today's high a day, which is very close to that level, 316.78, which is what? Only 8 cents away from that high. So high day today, 323.20. 4-hour time frame, bulls absolutely rampaging. RSI 86. It's really the same on the hourly time frame. We have a nice hourly bull flag setting up right now. So if we're going to see upside continuation, what are we going to need to do? We're going to need to see a breakout and upside continuation of this bull flag, which will take us above that 316.78, and then that would be my confirmation for a bull break. That may change as we evolve pre-market, but right now we are in a bull flag trying to carve out a 5-minute or an hourly higher low way up here with our RSI 81.73. You can also start using your RSIs to draw on. If you are interested in technical analysis, one of the things that we can do is we can chart the RSI levels itself. We may even bounce right off this trend line with an hourly bull flag. If we see upside continuation, that would be a perfect bounce right off that trend line. So keep that in mind as you're watching as well. Overall, AVGO on fire, looking for that daily higher low, scouting those resistances. But as long as we have opportunities like we had for the better part of today, I'm going to ride those 2-minute levels, keep my stop losses very tight, and make my money. MRVL had a lot of opportunities on this one today. I recorded several trades on MRVL this morning. Those will be available for ChartGuys members. I do a lot of live trading. I record them, I post them, I talk through my analysis and my moves and where I'm setting my stop losses. So take advantage of that if you are a ChartGuys member watching this video. MRVL weekly time frame has a resistance at 2764. We don't have that EQ breakout that we have on our lovely AVGO, but we are setting higher highs and higher lows on the monthly. Possible head and shoulders here, but today's action really negates that. See how we've got this high at 2574, 2764, 2653, then negated. So what I'm interested in now is if bulls can get over 2764 and retake this weekly uptrend. Here is our weekly downtrend. Now it's going to be a counter trend to that overall move. Now we need to see 2764 break. On the weekly time frame, things are looking good, but on the daily, it's not quite as decisive. So we've gapped up in yesterday's action. Today is an indecision candlestick up against that 2764 level. Let's adjust our stops there. Didn't quite get there today. Our RSI is massively overbought on the 4 and hourly time frame. 68.50. Definitely would have been dipping above 70 on the high day today, now pulling back. So I'm expecting some weakness. This is an indecision candlestick. We may just consolidate sideways tomorrow. Who knows what's going to actually happen? We need to be prepared and react to the price action that we're presented. A lot of technical analysis. Well, a lot of people think technical analysis is about predicting what the price action is going to do or what the market is going to do, and basically treating it like a crystal ball, saying, well, are we going to go up? What's going to go down? What's going to happen? We have no idea. But we do have the ability to recognize price action as it's presented to us and look at possible scenarios. So if we get a nice consolidation pattern that looks like a bull flag, then we will have a bull bias and wait for the confirmation of that move and play to the upside. However, if we get an ascending wedge or we see RSI divergence that suggests that the bears are going to take control, then we're going to play short. So it's all about preparing and reacting. That's what technical analysis is all about. So today's candlestick tells us that this is a lot of volatility and a lot of indecision. We don't see the same strength that we saw yesterday. So when we have a move like this, it's likely that we see an inside bar tomorrow or a slight red day. That is not going to be unexpected because we are overbought and we need to consolidate. We need to establish a higher low. We need to build a base of support. So today's high of day is going to be an important resistance level for us at 2747, 4-hour time frame. Starting to see that cooling off. Still a 4-hour bull flag. I would like to see some more green action, but we're holding EMA 5. That's very important. Possible we'll carve out a higher low. And if we get an inside bar tomorrow, that would form that nice little range and show us that the bulls are going to hold this level above 26.91. Again, all of this evolves a lot during pre-market. Right now, we're still trying to carve out that 4-hour higher low, and we've got a long way down to our 4-hour support at 23.91. Hourly time frame, very much the same. A lot of chop. 27.47 is our resistance, and still trying to carve out that hourly higher low. So that is it on MRVL. What were our trades today? Well, we had a great move out of the gate. I top fished 27.43. As soon as we saw that weakness, we came down. We entered a short position, expecting a higher low over the low of day, 26.81. Managed to get that. And then what we were doing was looking for an equilibrium continuation from that high at 26.37. Entered a short position, but got stopped out as this 27.21 showed a little more strength than I would like to see. And that was the trade. 3 good trades on MRVL. Those will be available, as I said, for ChartGuys members. All right, next we're going to take a look at XLNX. This one was a beautiful play. And the beauty is not in what we talked about yesterday, nor it is in today's action. It is in this weekly time frame that I neglected to check out again. Absolutely beautiful descending wedge on the weekly. Multiple confirmations of our support and 2 confirmations for your resistance line, setting up a potentially beautiful swing trade. So let's keep an eye on this as it evolves. I am going to be incorporating this weekly pattern into my bias as I am watching for bull breaks. If we're long in the sector and we're a bull in this sector, this is the sort of thing we want to see, a long-term bullish reversal pattern that will get us out of this overall weekly downturn that we've been in since the early part, well, for the majority of the year, actually, since April. So this is what the sort of thing we want to see if we're long in XLNX. I'm going to say that wrong a lot. I know I am. All right, daily time frame. Yesterday we talked about anything under 98.86 being a lower high. That is definitely the case. We still have held 97.80. I think we broke it by 4 cents today with no follow through, lack of follow through on the break of a key resistance level is an indication that momentum is going to shift to the other direction. We saw that, and we have an engulfing candlestick when the MRVL closed, meaning momentum is heading to the downside, and likely we're going to get a lower high, or I would like to see a higher low over 89.83. So the textbook perfect thing for us to see would be to come down, test that trend line support, and find our entry for a long-term position and use 89.83 as a stop loss if you're going to even consider a stop loss on the weekly time frame for such a swing position. But current momentum on the daily is heading towards the bulls. Here's that nice rounded bottom we talked about. We're not quite getting that cup and handle formation that we need. We need to see a tighter range here that may yet develop. It's not quite here yet. A nice green candlestick not breaking the high of 97.02 would have me interested in that, so I will be watching. But right now, momentum is for the bears. We are in a 4-hour uptrend. However, we know that daily bias is there. Hourly time frame, we have lost the hourly uptrend, and we are now looking to set lower highs, lower lows. And our support really is down here at, what is this guy? 92.71. Something in that area would be an ideal support level for us. We'll see if we get there. Doesn't quite have the strength of the MRVLs or the AVGOs, but the long-term potential setup is here on XLNX, and we'll be keen to follow this one for the coming days, weeks, months. Who knows how long we'll be covering 5G, but it is exciting right now, and I hope you're enjoying it. All right, next one we're going to look at was requested by someone in the YouTube comments, INSG. You've never looked at this one before, so we're going to start on the weekly time frame as we should have done for all of the tickers yesterday. Overall, we've been in a weekly downtrend. $6 is going to be a major resistance level for us. That was a resistance in January 2019. It was a resistance level from the week of January or October 28th. So that's going to be key for us. We were in a weekly downtrend. We are now in a weekly uptrend, and we're going to focus very specifically on this trend here. We absolutely need a break over $6 psychological, and bulls have a lot of room to work with. We can go all the way to $4.42 and still be in a weekly uptrend. So right now we are looking at a reversal from $6 psychological. We need to establish a base of support on the daily time frame and hope for an upswing that would take us back to that 6 level test. On the daily time frame, we are in a overall daily uptrend, but what looks like we've actually lost that daily support level. The daily low for us was over here at 554. We can see our low, double bottom, triple bottom, quadruple bottom, and break. So now we need to see how far down the bears are going to drive this price. Our next support on the daily time frame is here at 516. If we have another candle like today's candle, that is a likely support test for us, and it is short term a very important level for us to hold. There is bearish momentum here after multiple days of attack. The bears are gaining ground. We do have EMA 26 support on the daily, but more critically, I'm going to be looking at 516 and then 5 psychological. We need to set a higher low above 516 in order to continue this daily uptrend and get another crack at that $6. And on the 4-hour time frame, there is that 4-hour head and shoulders pattern, loss of level, and we are now heading to 516. No signs of strength yet. On the hourly time frame, looks like we are setting lower highs, lower lows. The next low is going to be under $5.34. Bulls have quite a bit of room to work with here. I'm going to be using today's morning high of 552 as our lower high. Anything under that will be a lower high on the hourly, and then we will look for downside continuation. If we manage to break 552, bulls will have some proving to do to change this trend. But overall, we're optimistic for the weekly time frame. However, these daily bears need to get whatever bearish attack they're pulling off here out of their system. We need bulls to defend 516. We need to change this daily trend back to the bulls and get a crack at that $6 psychological level. So what happens if we do? What's after 6? 689, and then not a lot to $10. So a lot of potential here. Very exciting. All right, the last one we're going to look at today is ADI. ADI in the weekly time frame, also in a little bit of equilibrium, 124.79, 103.72, and then we've got 118.46, our new low, our higher low, 104.58. Now we are trying to see, are we going to get a high underneath 118.46, or are we going to break it and have an AVGO style breakout? If the interest and the hype in this sector continues to build, I would be interested in a weekly key break, and there should be some good momentum behind that if it does come. So watching 118.46 on the long term is going to be very key for us. Until that breaks, however, we need to just expect a lower high underneath 118.46. So on the daily time frame, that would have us coming up looking for that lower high, and perhaps that will come against 116.19 resistance. That is the high of October 1st. We are in an overall daily uptrend, having set a barely a higher low over 104.58 and then breaking above our high of 110.99. So right about where we are now is where we would expect to see a turnaround on the daily time frame, because we need to establish a higher low. It's been a while since we've done that, so bulls would need to come down, set a higher low above the low of 104.95, and that would help them and give them that assistance that they need for long-term continuation. So that is what I would be looking for right now: a tightening range on the weekly equilibrium, a lower high underneath that key level, and then establish a higher low on the daily time frame. So if that does come to pass, we see some weakness up here, we will be scouting for the higher low, looking for those hourly trend changes for our entries, and getting those best optimal entries for potential weekly EQ breakouts is what I love to do. All right, guys, that's it for our 5G roundup today. If you are interested in 5G stocks and you want to learn more about technical analysis, we have a dedicated 5G channel in our Slack community. We have a lot of people who are passionate about charts, who love this stuff, love trading these sectors. And I invite you to come check out chartguys.com, check out some membership options, and come hang out with us.